Okay, now with the Medicare supplement and the original Medicare, your maximum out of pocket is going to be your premium. Now, if you have a deductible like the Plan G, you would add this premium plus the $147. That's your maximum out of pocket. So everything that Medicare covers that they don't pay for is covered. You go to any Medicare provider, there are no restrictions. So now if we, versus the Medicare Advantage plan. Now if we take a Medicare Advantage plan, there are several different types. The private fee-for-service was the first one available when I started working with Medicare Advantage in 2004. And they could go to any Medicare doctor, and they had small co-pays, and they had small maximum out-of-pockets. And then, of course, in 2006, when the Medicare Part D came along, they started to include that Part D coverage for us. So as time went along, the Medicare Advantage plans have changed. The maximum out-of-pockets have increased, therefore the co-pays have increased. That means that the Medicare beneficiary has to be careful now that if they get a Medicare Advantage plan, how much have they got to pay up front to the doctors, and overall for the year, if they have a very bad year, how much is it going to cost them? Currently today it's anywhere from, like, say $5,500 to $10,000. And what concerned me most about this, Mickey, is that when I had clients call me and say, Sue, I was refused my care today because I did not have the copay of $45 or $50. So that broke my heart. So I now have started recommending to my clients to go with a Medigap policy, Medicare supplement. And we have a high F available, which is only about a third of the cost of a Medigap Medicare supplement F plan. So that we could talk about later to see which you like. Now it does have a $2,140 max out of pocket for 2014. But the good thing is that after the $147 Medicare deductible, Medicare kicks in and pays their 80%. So you're only paying 20%. So if you feel that your health is stable enough that this is good for you, then that's great, because if you do spend one night in the hospital, you would have to pay the deductible for the hospital, which is like $1,216 this year. So it's a risk that we all take. Now I am selling to people who Medicaid spend down the high F, because that of course saves our government from having to kick in and pay the whole bill. So after Medicare, because if someone's on Medicaid, then Medicare pays first, and then Medicaid pays second. But if they have these Medigap policies high F, then it's not as much for the government to have to pay, and really it's less for them, because most of the clients that I meet who have Medicaid spend down, they've got $3,100 every 6 months to $4,500 that they have to pay before Medicaid kicks in. So if the max out of pocket with a high F is $2,140 for the year, and premiums range, say, from $32 to maybe $58 to $60 max, then that's actually quite a savings for them. And then they can go to any Medicare provider that they want to, versus a Medicare Advantage where they are restricted to their providers now, because most of them are HMOs or PPOs. So they also, if they go out of their network, they've got deductibles they have to pay. So the only time now, Mickey, that I'm recommending a Medicare Advantage is to people who are on disability, who cannot buy a Medicare supplement.